Okay, good morning. Good morning, guys. Should be all ready to go now. I think we've got enough of you in the live room, all set up. Uh, so let's crack on and discuss some of the key issues of the day. Just watching a good bounce in equities last night. Some of the action that we saw yesterday, particularly after the European close, just really sharp. That sell-off from R1, I think partly spiked by this move lower that we saw in crude after the DOE inventory numbers. We got that spike beforehand, and then a sharp move lower in crude. I think that just led the S&P lower, and then we just had that nice test of the early December lows around 2040. Just decent sell-off there. And what is this about? I think this is down to three things, and I'm often asked, so why does this happen? Why does that happen? I think this is a combination of crude and that the way that is played out with equities is that when crude drifts lower, we tend to get particularly services, oil services and equipment, and drillers, producers, which has a rather large component of the S&P 500 in particular, tends to drive that very much lower. And what else is it? It's about the Fed next week, and it's also that correlation with the euro, which I'll talk about a little bit later. But we had the euro eventually getting up to above that 110 handle. I think the way that at the moment we're getting euro strength is equal to equity weakness. So it's definitely something that seems to be in play at the moment as we come towards just 4 trading days away from the Fed's first hike since 2006. Also worth noting, I think Anthony shared this yesterday, he sent this to you guys, really, really interesting headline in Bloomberg. JP Morgan, the Fed could trigger a massive stop loss order in the S&P 500 if liftoff goes awry. For those not familiar with options, there is a huge amount, approximately 1.1 trillion worth of options on the S&P 500 due to expire December the 18th, 2 days after the Fed. And the most of these strike prices, particularly puts, so that of these options, 1.1 trillion, 670 billion are puts. So that's options to sell the market with a strike price, i.e. the price at which anything below that you are in the money, ranging from 1900 to 2050. So there's a lot of people out of the money right now as we come towards that Fed meeting. And if we do get the idea being, as JP Morgan are saying, pointing out here, is that if we do get a big sell-off, or even if we get a big rise, you could start to see big sellers appear, guys who have been holding these puts, desperately trying to sell the market to try and get back into green before this expiry date. So it's going to be an incredibly volatile event as these options traders try to prevent affecting a massive loss on Friday, just 2 days after. So definitely something to watch out for. If we do get, and likewise, if we do get a bit of a move lower, then we could get further speculation by guys holding these puts to sell further to the downside. Just something worth keeping an eye on. And just looking at the S&P, I know we've looked at this chart a huge amount. We are now trading just about where we started the year. So start of the year, it's been quite a journey. If I go back on a weekly chart, and as you can see, we begin the year round about 2045. Yeah, we opened the year first week of January, 2045, and here we are now, 2048. So the S&P absolutely flat on the year, and with not a lot in the way of what really can they look forward to next year. Earnings are fairly stagnant. The economy isn't fantastic. You've got a hiking Fed, and no more additional stimulus for now, at least from the ECB. So not lacking bearish catalysts for the S&P, but against that, interest rates remain low, and there's little place to put your money apart from in equity, so should support it longer term. But in the near term, we look like we're getting this rounding top, which was the last year where the Fed, where the S&P closed the year out basically flat. Well, back in 2011, very, very similar. Technically, as you can see, we traded flat throughout most of the year. Then we had a big sell-off start of August, like we have done this time, and then another push towards the lows early October, exactly like we have had this year. And then we rallied generally pretty strongly. We still closed the year pretty much flat, but then we rallied for the next 4 years and basically just didn't stop until the Fed started removing their monetary stimulus. So which one is it going to be this time? Is it going to be 2011? Or if we look back at the tops from 2007, very similar pattern you've got emerging. You've got this nice big rolling top in 2007. And here you see trading flat throughout the year in 2007. Then we have, to kick off 2008, we have a big sell-off in January, and then we try and make it back, and then towards the end of 2008, well, we all know what happened then. So which way is this rounding top going to go? If I look as well towards the 2000 top, quite similar. This topping process taking a long time. We started topping out, say, in 2000, and so it took a whole year to top then. And in 2007, well, we spent the whole of 2007 topping as well. And is 2015 also going to be the year of the top, as I see another flat year? My money is on it being the start of perhaps a more substantial correction early next year, rather than a 2011 for the reasons that I mentioned. But if we look back for today, if we look ahead to today, we're getting a really nice bounce from that 2040. There is probably room for a bit more of a rebound today. Key correlations to watch, certainly with I'll just get the Euro chart up. In the middle of the range for the year. If I just get up my fib, from 115 handle to 105 handle. Yeah, it doesn't take a genius to work out that we are slap bang 110 handle, right in the middle of the yearly range. And I said in October that I would definitely be a seller if we got back up to the 110 handle after this big sell-off. It's still hard to see if you can get a big push up here in the euro unless we get a correlated move in the S&P before the Fed. I don't think that you can really aggressively buy the euro unless it's in some kind of correlated move before the Fed. So I think this move that we've seen so far in early December on the Draghi disappointment, I think that's probably set to take a bit of a sideways movement. I mean, we're just 4 days away now from the first Fed hike. If we are to take Janet Yellen at her word, which has been fairly risky business, certainly in September, then I'd expect us to trade maybe sideways from now on. I think 110, as you can see, it's a bit of a level. Early on in the year, we had the March top there and the April top there. Okay, and then we chopped through it a little bit. You've also got the 61.8 fib here at just above 111 handle, which also acted good support for the market throughout September and August. It was a nice top there. So let's just get another little line in here. And it also nicely marks the January first push lower that we had, 21st of January. That was actually the day that Draghi announced formally QE. So quite a significant level that. Also the 61.8 fib, so technically quite an interesting one. If we do get a push up, if we do get a bit more selling in the S&P, then that 111.20 level certainly a good one worth to keep an eye on. I can't talk about currencies without mentioning the yen. I posted this chart yesterday in a couple of the rooms. As you can see, we in very, very short space of time, we broke through the entire trading range that we've been in for the past month and a half. Well, it was a very violent move once we got back above it. See, yeah, just here at 145, we come up again here, test it, and round about R2 as well on the day. And look at that violent move. It stops getting triggered. People trying to short the top of the range. Nope, that's not happening. And up we go. And I think that just triggered another little leg lower in equities as well. So definitely worth keeping your eye on. If we do drift back onto this range, that would be a classic for those who believe that the dollar race is run. Then maybe that level is certainly a good one to keep an eye on. If we come back and test that, so decent move in the yen, and that's because it is the ultimate safe haven currency, even more so than the dollar. When you do get risk off, when you do get a flight to quality, you tend to get a big move towards the yen. A lot of money flows into that. Why is that? Well, it's a hard currency. It's one of the 4 hard currencies. It's got a history of very low inflation, very stable central bank policy. It's very liquid. It was used as a carry trade for many, many years. So for that reason, it is certainly one to watch out for. If you're trying to trade these correlations, if we do get more sell-off in the S&P, if we do get back down rather to that top of the range, then that probably marks a bit of a top of the bounce in the S&P, depending on what the Fed do next week. So if I'm trading equities, I'm certainly keeping an eye on the yen, given how well that correlation has worked. Recently, and certainly with the euro, as I mentioned at the moment, just trading back below pivot. Really strong day yesterday once again. Also worth mentioning the Nikkei. If the yen appreciates, then that's very negative for Japanese equities. As you can see, that big sell-off here coming right on the Japanese Open and dropping all the way down. Well, that's over 300 points. So that's a really, really decent move in the Nikkei as the yen appreciated nicely. We got that break in the yen higher, and therefore the Nikkei has to head lower in that correlation. So talk about crude. We have to talk about crude. It's just no end in sight at the moment. Real choppy session yesterday after the big moves that we've seen recently. A lot of people saying, well, why aren't we going down? Why aren't we heading lower? Well, we did get a first drawdown for the first time in 10 weeks, officially confirmed. We got the overnight API inventory came in the drawdown of 1.9 million, and we got that confirmed with another drawdown yesterday in the Department of Energy. So we got that spike up to 39. It was almost as if the markets thought that there's no way we're getting above $40. And look, this is one positive news story in what is still an overwhelmingly oversupplied market. I have a few things with that in mind to show you. As you can see, this is the IEA looking at some of these key statistics. Commercial inventories in the OECD, so developed market economies, rose by 13.8 million barrels, and they are now sitting at over, well, just about 3 billion barrels, sorry. So we have 3 billion barrels just sitting in global inventories. That is a record. So huge, huge oversupply remains. And a reduction in supply of 1 million barrels is just a drop in the ocean, as you can see. And also, this is looking at, so that's the IEA, that's the International Energy Agency. Certainly a really good source of information. The other good source of information is the US Energy Information Administration. It's another publisher of really good statistics, just looking at production and consumption here. As you can see, massive imbalance between consumption and production. As much some stages as 2 million barrels of oversupply. As you can see, in the second quarter of this year, we had an oversupply on average of 2 million barrels. So we had 2 million barrels a day more being produced than being consumed. So that's just helping to add to this big inventory oversupply that we've got, 3 billion barrels, and no end in sight. As you can see, their projections for the next year, well, okay, we're still tightening in terms of consumption versus production, but we're still looking at an oversupplied market to the tune of under 1 million barrels a day, but still significant. So at the moment, it's difficult to see whether we can get any relief in the short term, at least. Here's a look at the inventory data. As you can see, nice big solid drawdown yesterday, but look at all those big blue arrows on the top side here. Some absolutely massive increases over the year, particularly early on in the year. So crude at the moment, I'm still bearish. I think it's hard to think of too many reasons. It doesn't mean it's going to go down every day. I would like to see us get a test of the lows of the year. Can I just get up my monthly chart? Crude. Wow, what a journey it's been. You've got this. Obviously, this is the low that we've been talking about for a while. In CLE, I'm looking at the December low of 32.48. And then if we get below that, I mean, some of the more bearish analysts I've seen, you've got the lows of 2001, November 2001, when that was just after 9/11, and the US fell into a recession and global growth wasn't fantastic. So we've got a little bit of a pullback in commodity space, and that's below $20. So last time we traded below $20 was in 2001. I don't anticipate we'll get there, but I do think we're still on odds on to test that 2008 lows, because we're just lacking catalysts at the moment for a move upwards in this kind of high stakes game of chicken that we've got going on with the Saudis. Iran also looking to put a huge amount of supply out there once the sanctions end. As we all know, they could add as much as 1.5 million barrels a day. Where's that going to go? We've already got an oversupplied market. And at the same time, the shale producers remaining really nicely resilient. Once again, we've got another US output figure above 9 million. So shale production showing no sign of weakening at the moment. So you've got to say that the path lower from here has to be odds on a further fall. So looking ahead to today, I mentioned the action overnight. We had the Nikkei falling quite sharply on that move in the yen. Just looking at that. The Reserve Bank of New Zealand cut rates by 25 basis points. That's about it. Anthony's been doing his usual morning wrap in the room, so do give that a read. I'm looking. Let's just have a quick look at the S&P today. Just again consolidating below pivot. We got that nice push up early doors. Struggling a little bit. Wouldn't surprise me if we got a bit of a push up, a bit of a rebound in equities today. But as ever, watch the yen for that correlation. Watch the euro again now below pivot. If this euro can continue to give off and ease away from that 110 handle, then there's room for a bit more upside in equities. I'm still a net seller of the S&P, and next week is going to be absolutely fascinating, particularly when you consider all those options expiries 2 days after. 1.1 trillion reasons for the Fed to get it right. Huge amount of speculation will be taking place, I'm sure, on the day and thereafter. On the calendar-wise, just looking, what have we got? Super Thursday, Bank of England. We're expecting 8-1 once again. Really decent day for cable yesterday. Some of you guys trading this very well. I'll just get out my cable chart, just consolidating at the moment. We hit 152 handle yesterday, really decent push up, and sitting in quite a nice wedge pattern here. I just get some charts. So sort of sitting in a bit of a wedge here in cable, which perhaps giving a bit of credibility to those who think that this dollar rally is over for now. Piers mentioned that 3 weeks on average, 3 weeks before that first Fed hike, you tend to get a topping in the dollar as it all gets priced in. Well, it certainly looks that way, judging by the way cable is traded and the euro is traded recently. So let's see what the Bank of England have to say. That'll be at midday, as usual. We're expecting 8-1. Then for the afternoon session, just looking at initial jobless claims at 1:30, as usual. And that's about it. House price index out of Canada. Not a big one. We do have some data, some cable data, some UK data in about 15 minutes time with the trade balance. Not expecting a big move off that, and I wouldn't expect any large moves in cable, certainly before the Bank of England announcement at midday. Trading live, guys, should be all up and running now. So as Anthony's just writing in there. So that's it from me at the moment. I'll be in touch later on to discuss the strat. We had a tough day on the strat yesterday. Pretty tough day, I think, for these markets overall. I think after the big moves that we saw the day before, it was quite hard. Unless you got hold of something like cable, which really flew. We didn't get a lot of conviction in equities until after, annoyingly, until after I'd gone home and after the European markets closed. And crude as well had a real choppy session. So yeah, that's it. I'm going to crack on to chat to my traders. Wish you guys all the best. I'll be on the mic later, but in the meantime, I'm going to leave you in the very capable hands of Anthony. Guys in the live room, really looking forward to catching up with some of you tomorrow at the live trading live Christmas party. What a year it's been. Looking forward to sharing some war stories. China, Bund sell-off, Black Monday, crude, Draghi, SNB. Wow, yeah, wow, that was a while ago. Back in January. Wow, feels like a lifetime ago. And maybe concluding things with the first Fed rate hike since 2006. So a huge amount to reflect on, and I hope to see as much of you as I can there tomorrow. But in the meantime, guys, have a good one.
and